Jordan, good to see you. A really interesting topic today. Why DIY investors earn less. According to Vanguard's Advisors Alpha study, a good financial advisor can add about 3% in net returns per year. Per year, that bears repeating. What do you think is behind that performance gap?
Well, it's not just the investment portfolio, but for DIYers, they think, oh, I have low cost funds or I can do it myself and not pay an advisor. But what they don't always realize is they don't have all the tools, so to speak, in different investment options.
Mm.
Like we as a firm have world-class managers, different investment tools that can help our clients take very little risk or maybe even no risk and still get very competitive returns. And that DIYer doesn't even have access to those accounts. Also, it could be, asset rebalancing. Well, maybe you have a stock you're holding or some funds you're holding, but they're not doing that maintenance themselves, the DIYers, and doing that asset rebalance every quarter or major market events. So we want to make sure we do that and provide extra value for our clients.
Mhm.
On top of that, we make sure that we look at kind of tax considerations. A
Yeah.
lot of people realize that it's not just about what you make, it's about what you get to keep. So we like integrating tax planning in the investments. We have this chart that we're a one-stop shop for all these areas where many people are just focused on the investments. And DIYers look at the investments a lot, but what they sometimes are blinded to is the other impacts when it comes to having a solid income plan, tax planning, healthcare planning, legacy planning, and they can't do it all. Even myself and everything. That's why we have a team approach.
Mhm. So I want to throw out one more study at you. According to Dalbar, which is very famous within the industry, I know you know it, but every year they come out with this. DIY investors often underperform the market as well because they are driven by emotions. Explain what's going on here.
Aaron, you and I, we're emotional people. We're human beings. We're not robots. And when emotions play into the finances, that actually hurts a lot of people because there's a lot of headlines, a lot of things go in the news, wars, pandemics. And when the market's going good, everyone's excited, everyone's happy. They got that thrill, euphoria. And then sometimes they get some anxiety. The market starts free falling. They get depressed. They get panicked. They sell at the bottom. And then what happens? They have some hope and they get in, but they get in after they miss the upturn of the market. And we want to make sure we're not focused just on the portfolio, but we're focused on the plan. And when you're focused on the plan, you can eliminate and compartmentalize the emotions to make sure you have peace of mind no matter what the markets are doing and make sure you don't miss on the opportunity when the markets recover.
Mhm.
And DIYers, that who's watching it? They're watching it. And when they're emotional, their portfolio is reflected in that.
Yeah. Many DIY investors believe they can save money by avoiding advisory fees. So, how do you help clients understand the value you provide?
Yeah, I'll say that you get what you pay for, right? If I'm going to go through a drive-through fast food restaurant, I get what I pay for. Or if I'm going to go to a luxury nice steak dinner, it's probably a higher price, but I got a lot more value. Now, I'm not saying you have to go to the most expensive firm, but I am saying you need to make sure you work with a firm that you can clearly articulate and visually see the value. We are a one-stop shop firm, right? We do everything. It's not just the investments, it's the tax planning, it's the legacy planning, looking at estate taxes. We help our clients with Medicare. We prepare our clients' tax returns. We help have an income plan they're confident in. This is our roadmap to give clients peace of mind. And DIYers, they sometimes focus on that little investment and that fee, and they're not zooming out to see the big picture. And again, one more illustration. If you're going in for a very serious surgery, do you want to find the cheapest doctor out there? Well, no, you want that doctor to get paid and paid well for what they do and provide you value. So if you can work with a firm that provides you value, you shouldn't be focused on the cost because they should 10x, if not 100x that cost over time. As you open 3% net per year, that's huge. And where I think a lot of people aren't even looking at, if your goal is to leave money to the next generation and taxes keep on changing, there's going to be a huge wealth transfer that is going to be the beneficiary, the IRS.
Yeah.
And working with a firm like us can literally save your family potentially hundreds of thousands of dollars that'll far outweigh any cost of doing business.
So, for someone who's thinking about hiring an advisor, what's the best way to start that conversation to determine if they should, and what should they expect in that first conversation?
Well, they should expect the advisor not to tell them what to do in that first conversation. The reason is the advisor doesn't know what to do because they don't know you. So they need to listen. They need to ask questions. And you should be talking for 70 to not 80% of the conversation, because they should be asking a lot of questions about who you are, what your preferences are, what do you want to do in life. And the more and more they get to know you and understand you, the better equipped they will be to put together a plan that you can have peace of mind and have confidence in. So we get to know people. Actually, we have a video to put people at ease, because it can be intimidating to sit down with an advisor. So it's a 3-minute or so video that'll show you what to expect when you come to our firm, how we handle our practice, and how we get to know you over those few minutes.
That's great. Well, let's make sure that we link to that video as well for anybody who is curious. But Jordan, if there's a DIYer who's listening to this and would like to come and sit down with you so you can hear about their goals and how you can help them, what's the best way to reach you?
Yeah, I'll say for the DIYers, sometimes you still want to do it, and I'm not going to twist your arm. But if you are open and you're serious about having someone help you with your finances, you can give us a call at 847-499-3454. And I'll throw one more thing out there. If you're a spouse of a DIYer, how are you going to feel when your spouse, maybe accident happens or they're not here? How are you going to handle everything? I think a lot of DIYers have actually worked with our firm because they thought about their spouse and making sure they're going to be okay after they're gone. And that's one aspect I like to address with our clients.
Yeah, that's a really good point. Jordan, thank you for your time.
Thanks, Aaron.